Hello everyone. Today we are going to discuss another penny stock named Sarveshwar Food Limited. If you look at the price of this share, so the price of shares has been soared from 3 rupees per share to 9 rupees per share. That brings to the attention attention of the investors that why the pricing of the stock has been increased so far in last 1 years of data, and that is how we discuss what are the pros and cons of the company. If we look at the brief introduction about the company, so the company is incorporated in 2004, having an experience of 20 years in the business of basmati rice, long range basmati rice. Also, company is likely to foray into business, already forayed into business of spices with the product name Nimberg Foods, branding under Nimberg Foods. Also, company has taken a procurement agreement with the for procurement of dry fruits and apples as well in Baramulla and Kashmir, and I would say Pulwama. The company is having an export share as well of 22% with clientele in USA, China, Middle East, and Europe. So like China, a country like China also import because of the high quality green rice, and this is the stock which is never being hinted by the government actions, because government always try to impose ban on the exports of rice. But this is not generic rice or general rice, or I would say broken rice. This is the basmati rice and premium rice. So in this sector, the government, in this portion, the government will never impose restrictions, because this is in premium category and not really affordable by general households. Looking to the market cap, so the market cap is around 900 crores. Current pricing is around 9 rupees per share. ROC is around 11%. RO is around 8%. Stock P is around 53, but a year ago it was around, or if we say a median, so the median PE is around 37 and 53 it was in actual terms. It means that the stock is overvalued, and as I have discussed, that the pricing of the stock has been sold to more than three times in last 1 years of data, and that is the reason why it has been increased. If we look at the yearly data, so the sales has been increased consistently, and the current sales value is around 870 crores, which is equivalent to the market value. That is also a good, that shows that the company is earning what it is having in terms of market value. Looking to the operating profit, so the operating profit margin has been declined in last 4 or 5 years, in particular, uh, and that is the reason why their operating profit margin seems a dip. But now they have recovered post COVID, and the operating profit margin hits peak of 55 crore rupees, and that is the reason why the company has maintained their performance post COVID of 17 crores bottom line, and net EPS of around 17 paise per share. If we look at the sales growth, so the sales growth is around 5 years, and the compounded profit growth, obviously, because the company has dipping their operating profit margin from 10.98% to 6.54%, and that is the reason why their profit growth has been drifted. But if we look at 3 years data, when the profit operating profit margin has been stagnant, so the 3 years data, the sales growth has been increased by sales growth has been around 19%, but the profitability growth has been around 58%, which is three times what it was if we compare it with the sales growth. And looking to the 12 months data, so it is around 26%, but it has reached its peak of around 4.5 times or 5 times of the sales growth. We look at the stock pricing, so the obviously stock has sold off three times in last 1 year data. That, well, that would be a good indicator. So the company has given corporate actions like to bonus issue. It means two for one share. It means you get three share, and after that they are also those subdivisions. So one shareholder get 30 shares after this corporate action, and that is the reason why the shareholding pattern from 2.9 crore shares, the share number of share has been increased to 98 crore shares, and the reserves has toppled to reserves has been being diverted to that portion. And in this situation, whenever the a company has issued bonus or split their share capital or doing any corporate action, so we have to see that what is the action, what is the effect after their corporate actions. So not we look in the reserves and surplus only, we have to look the both combined net worth. So in, if we look at the combined net worth, so the combined net worth in March 23 is around 192 crores, but it has been increased to around 253 crores. So 192 crores to 253 crores. So the combined net worth has been increased by 51 crores. So even though the reserves has been declined from 163 to 155, but in this case we have to look the combined net worth, and the combined net worth has been increased by more than 51 crores. Well, that is a good indicator, and that is something which we have to look into if in terms of if the company has did this type of corporate actions. If we look at the long-term borrowings, so the company has doubled its long-term borrowings to around 92 crores from 44 crores. Though also the short-term borrowings has been seen a slight dip of around 20%. Well, the overall increment in the borrowings is around 10 crores only, but if we look at the other assets, so the fixed assets are same as what it was. If we look at the trade payables, so the trade payables has been increased substantially from 29 to 152 crores, and it is more than 5 times. And that brings to the one of the other point that the inventories has been piled up. See, the inventories has been piled up to around 60s, and they are 71. So around 88 crores of inventory has been piled up, or 87 crores. So it shows that the because the how why the receivables has been increased, because the company is piling up their inventory, and that is the reason why the inventories has been increased. Also the trade receivables has been increased, but not in that proportion. So it is a good indicator that even though the sales are increasing, the turnover is increasing, profitability is increasing, everything is increasing, but the trade receivables is not increasing. And this is the efficiency and ability of company to encash their books and their trade receivables or bills receivable. And that is good factor, and that is something which we have looked into checkpoint or tick point for the company. If we look at the operating activity, so the operating, this is the issue which I want to discuss here only. This is something which you look into, and also we have to look into the data of this is a March 24, so we have to look the data of June 24 as well. So to see that what are their operating activities. And because in last 2 years the company has consistently having a negative EBITDA, but the financing activity shows a payment of around 26 crores of interest. So if the company is having negative cash from operating activity, so it will be an issue for a company to pay off in interest, and the liquidity crisis arises. And that is the reason why we have to look at what are those things. So if we look at the operating, so the company is having, let's say, operating negative cash flow, and the interest payment is 26 crores. So how, if the company is not having the cash from operations, so how company is going to pay off their interest? And for that the company has increased proceeds from shares. Company has raised their funds, and they have taken loan as well. Well, that will be sometimes proceeds from shares can be a good factor, but the pace at which the company is consistently taking loans and loans, and to finance their debt, they take more loan. To finance their debt, they have to offer a stake, or they have to proceeds take proceeds from shares. So that is something which shows that even though the company is increasing their share capital and diluting their shares, and the proceeds from and also taking borrowings, but that is totally attributed towards debt financing. And that can be a debt trap situation if the company does not works well on that, and company do not look in that scenario. So that can be a debt trap for a company. And company, even though the sales has been going, like JP Power, what the JP Power has done, various companies, they are in expansion mode, but they do not see their debt, and that is the reason why they have gone into insolvency and all those things. So this is the factor which we also have to consider as a company, as an investor, that whether the company is having taking loan, what are their proceeds through which they are going to pay off their loan and interest payment. Are the company capable enough from the operations to pay off their loan? It means the kind of loan company is having, the operations are not sufficient enough to pay off that loans and interest for the time being. So that is something which we have to look into, and after that we will take decision accordingly. Where promoters has decreased their shareholding to 55%, but that will not be an issue unless it goes to as low as 40% or less than that in short span of time, because in last 3 quarters the promoter has not reduced their shareholdings. So that will not be an issue for the time being. Only issue for the time being is the cash from financing activity and the cash from operating activity, which we have to look into, and accordingly we will invest. Also the FII has a mere investment, but see a panel stock like this where the FII is having some investment, well, that will be a something that their shares seems to be gem in an eye of retail investors and the investors. However, these all are the things which we have discussed, and accordingly, we will take you know, get a takeaway that whether this stock is performing well or not. And with this, you can understand how to read the financial statements. So, from my side, I will say this is an educational purpose video, and I'm not providing any portfolio management services relating to stock markets or buying or selling of any stock markets or any opinion on any stock markets to invest into that particular share or not. So please consult with your financial advisor before investing into stock markets. With this, I conclude myself. I hope you will all enjoy the video. Thanks for watching.